Welcome back to the channel. It's always nice to have you here again, whether you are watching for the first time or you are a returning viewer. Thank you for joining me again in this video. Before we move into today's business, please kindly remember to hit the like button, like the video, and also subscribe to the channel so that whenever I upload a new video like this, you will get notified so you don't miss out on any relevant information we dispense here. Also, if you have a contribution, question, or a different point of view, you can do well to just ensure to drop it in the comments section. Yeah, thank you. Okay, moving straight into today's business. So we'll be looking at Seplat Energy Plc's debt to equity ratio. I need to quickly edit this. All right, yeah, okay. So Seplat Energy PLC are actually a Nigerian independent oil and gas company, and they are listed on the Nigerian Stock Exchange and the London Stock Exchange. So their business involves exploration and production, and as well as development of oil and gas assets, and they are focused on Nigeria's Niger Delta region. So some key facts about them is that Seplat Energy was founded in 2009. They have their headquarters in Lagos, Nigeria. Like I mentioned before, they are listed on the Nigeria Stock Exchange and the London Stock Exchange. So on Nigeria Stock Exchange, you see them as Seplat, and on the London Stock Exchange, you see them as SEPL. So they have a market capitalization of approximately $1.5 billion, and if we are converting that to naira, that's about 600 billion naira. So and per day they produce about 50,000 barrels of oil equivalent, and some of their strategies actually includes to grow production through exploration, development, and acquisitions. They focus on cost optimization and operational efficiency. They also have intentions of expanding into renewable energy and low carbon initiative, and I trust that they are already working on that. So one thing I love about this company, I so much love them. Like when I was making this research about them, I was thrilled. One of the things that thrilled me about them was that they had the highest share price that I've seen. So this price here is 3,730 naira per share. So that's actually that's the highest in my research. I've been analyzing several companies, as you can see on this channel, but this is the highest I've seen. Before now, I think Airtel was the highest, which is 2,000 something, but this one is actually mind-blowing, 3,000 naira, compared to other companies that have some prominent companies. For them, their share price is actually very low. So this is actually one thing that made me fall in love with this company, coupled with their strategy of expanding into renewable energy, low carbon initiative, and so much more. So another thing that endorsed my love for them is that they actually, based on this, they actually won the best performing stock as of 2020. So the NSC, which is the Nigeria Stock Exchange, gave them the award, the annual award. They won the annual NSC award in 2020 as the best performing stock. Also, they won the Oil and Gas Company of the Year in 2009. So the Petroleum Industry Award, actually, the Petroleum Industry Award, which they won in 2019 as the Oil and Gas Company of the Year. So this company, will see there are actually big shots in the oil and gas company. So let's look at what their debt to equity is saying. So first of all, we want to look at what's total debts and equity. What is total debt? What is total equity? What is the debt to equity ratio? So the total debt is the total amount of debt that a company is using to finance their assets, while total equity is total of amount of equity that the company is using to finance their assets. So what then is the debt to equity ratio? The debt to equity ratio then is the proportion. It helps to check up the proportion of the company's assets that is being financed by debt. So if this proportion is less than, if this ratio is less than 1, it means that it's low, and that implies that the company's asset is being financed majorly by equity. So the significant financing of the company is handled by the company's equity. But if the ratio is more than 1, if it's between 1 and 2, it is considered moderate, which suggests that the company has a balance between debt and equity financing. And if the ratio is above 2, it is considered high, which indicates that the company has more debt than equity, which potentially increases financial risk, and it makes them vulnerable to interest rate changes. So we are going to look at what this debt to equity ratio of Seplat Energy looks like. So if we take a look at the data set here, we'll see here I have computed the debt to equity ratio, which is just by dividing the total debt by the total equity, and then we arrive at 1.63. So with this value and with the interpretation I just gave, this falls between 1 and 2, which implies that they are actually moderate. So it's a moderate ratio, which suggests that there's a balance between debt and equity financing. So they are not too low, which means that since they do not have the major part of their funding financing coming from their equity, and not too much of it is also coming from debt too. So they kind of have a balance. So we could see the amounts here. We could see that their total debt is 2 trillion naira, and the total equity is 1.3 trillion naira. So it kind of forms a balance between both of these metrics. So that is what it's actually saying. So here, we could see the proportion here, that is according to the this chart, that is this pie chart that is being displayed here. So we see here that this proportion is being financed by debt. This is the debt part, which is what, 62%. We see it here, 2%, and we see that the equity part is 38%. So regardless of this, we actually see that this company is actually leveraging on their debts, and they are actually making a lot of they have an operation. It indicates that they have operational efficiency, because if this is actually the level of debt, if their level of debt is more than the level of equity, and they have that amount as their share price, it means that they're actually doing very well. And we also know that amidst the challenges that is going on in the Nigerian economy now, the industry that still stands the best chance is the oil and gas sector. And obviously we see that this Seplat Energy Plc is actually doing very well. So if you are planning to invest in any company, the debt to equity ratio is where you need to look at very, 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 very well. The debt to equity will look at very, very well. So if you see that this value here is more than 2, it is not advisable to invest in this company. If it's between 1 and 2, it is still moderate. If it's less than 1, then there's actually low risk. So that is what the debt to equity ratio is saying. So it actually gives a hint, it gives clarity of exactly how a company finances of how a company finance their assets. So that's all about this video, and a humble reminder again that you kindly hit the like button, and also endeavor to subscribe to this channel so that you get notified whenever I drop a video like this. So I didn't call these prices, I didn't call this amount, so The total debt here is 2,154,299,298 million, while the equity they have is 1,318,819 million, which is 62% of the total company's assets being financed by debt, and then the total company asset is what is equity is 38%. All right, thank you for staying till the end of this video. I hope you gained some insight and you enjoyed the video, and then till we see again in my next video. Thank you very much.